Hello and welcome to the Crypto Jungle. My name is Baloo, and here on the channel I keep crypto simple. If you're wanting to learn how to read asset charts, specifically cryptocurrencies, then you've come to the right place. This is a no hype, no fluff, no bull crap channel. We just look at the charts, we look at the fundamentals, and we see if it's a good investment, because 99% of the projects that are out there are just complete and utter garbage. So in today's video, I want to focus a little bit more on the on-chain data and make some comparisons between what we've seen in the most recent shakeout compared to the blow off top of 2017. There are a lot of people calling for a bear market, and from a technical point of view, we are in a bear market. There's no ifs, ands, or buts about it. There's no kind of, if this, then, we continue. From a purely technical standpoint, when you're making lower lows and lower highs, it's a bearish trend with no trading volume, meaning that the market doesn't care. It's a bearish trend out there. Okay, so from a purely technical standpoint, it's bearish. But from the fundamentals on the on-chain data and what we're seeing in a lot of the other metrics that can be helpful for the overall health of the cryptocurrency market is a little bit different. So we're going to dive into that. And without any further ado, let's go ahead and take a look at the king of all cryptocurrencies. That is Bitcoin. Starting out here on the daily, I just want, it's just more of the same, guys. We've pointed this out several times. If you're new to the channel, subscribe below. We release new content 3 times a week, but we've been calling this basically since the top, saying that, we got our first lower low. That was followed by our first lower high. And then as a result of that lower high, we had our shakeout, our meltdown. So now we're concerned about this area right here. We're looking at this consolidation pattern. We're trying to determine strength. Okay, there is no strength inside of this pattern. If we just take a look at the volume, the trading activity is higher than it was, back here, but it's heading to the downside. You can see that it is decreasing volume overall, decreasing trading activity, decreasing supply, decreasing demand. It's overall decreasing. It's not a good thing to have decreasing activity in a healthy market. So we're going to assume that we are bearish. That is coming into the context, that is coming with the context of lower highs and a curling over, now sitting on support. This support really does need to hold. If we can hold this support level, we can continue to trade sideways, okay? If we can break above this area of resistance right here, we have permission to continue to trade sideways. We are not heading up, we're just going to continue sideways. So if we fail to hold this level, however, and if we do wick below this area of the sign of weakness, this is not a spring like we had marked it down before. This is clearly a sign of weakness because there was no follow through after the fact. But if we do break down below this level, breaking the lows of the sign of weakness, that is going to confirm this as a last point of supply for those Y-Coffeans out there. That is the LPSY, last point of supply. If we get a last point of supply inside of this consolidation, it's going to be very hard to ignore it as ignore the fact that it is a redistribution. So we would be looking for lower levels. The next major area of support is down in this area right here of the original breakout of the bull market itself. So we'd be looking in the range of around $20,000. So not a lot of support underneath us. 20 grand is kind of the next area. There is something of concern in terms of sentiment and approach to the market coming specifically from retail and newer traders that I kind of want to address. And that is this whole notion of the entire market speaking in terms of we need to hit this level so that we can continue to the upside. We need to hit 20K so that we can turn around and break out the all-time high. We need to, break below 31K. We need to hit 27 so that we can break out to 40. When you're in a macro downtrend, when you are in a bearish market, when you are in a low demand market, your goal or your approach to the market can't be, we just need to get this low so that we can break the trend and head higher. You're trying to predict things that are impossible to predict. You're trying to, tell yourself that, as soon as we reach this level, all's good. Everything's going to change. The fundamental drivers of demand are just going to magically kick into action, and we're going to take off from here. This is not intended to be a super bearish video, but I'm noticing this a lot inside of the market where people have downside targets that need to be met so that we can reverse the trend and head to the upside. That is illogical. So please approach this market responsibly. Please wait for confirmations. For me, inside of this consolidation, until we get above $40,000, there is nothing to be excited about. We're just going to be here trading sideways or down because the market has structure that is going to allow us to head to the downside. So that is the bearishness from the technical side, but let's make a few comparisons to what we saw on the on-chain data compared to 2017, the blow off top of 2017, 2018, to what we saw most recently here. So I'm just going to go over to Glassnode. Glassnode is one of the top on-chain analytics sites. And we're just going to keep it really simple. We're going to keep it really simple, and we're going to focus on the addresses that have a Bitcoin balance. I am going to start out with any address that has a non-zero balance, meaning if you have one Satoshi, you go under this category. And basically what we're seeing all throughout the bull run of 2016, 2017 is just an increase of the addresses, increase of the amount of addresses that held Bitcoin until we got to the blow off top of 2017, at which this is a bit of a lagging indicator, but it is a strong measure of what the market was doing and how the market was handling things. Once we had that blow off top, we saw a lot of wallet addresses drained to zero. So we went from an increase in the amount of Bitcoin held in wallets to people draining their accounts down to zero, closing out their Bitcoin accounts, and likely cashing out. This is not directly correlated with selling. This is simply what is being held on the wallets themselves. So when we look at that, you can see just a huge amount of emptying of the wallets as a result of this blow off top. When we go back here, we're not seeing that. We're seeing volatility in the containment of the wallets. Now, volatility is not a bad thing because we're seeing people sell and we're seeing people accumulate. So we're kind of trading sideways in terms of the amount of Bitcoin that is inside of the wallets. But what are the whales doing? What are the higher addresses doing? And how are they behaving, not only in the last cycle, but how are they behaving now in this cycle? So let's go ahead and bump it up. This is by no means a whale. We're just going to go take this one level at a time. But again, so now we have the balances of 0.01 and above. So that's somebody that has, a little bit of Bitcoin. Similar structure, we're not going to dwell on it too much, but you can see the trajectory of wallets with that amount of Bitcoin at this point in time is relatively flat and relatively stable. Again, the blow off top, we saw a parabolic move and we saw a move to the downside. So definitely differences in those characteristics. Now we go to 0.1 BTC. And we're seeing a similar thing. We have the blow off top, a draining of the accounts, and then over here we had our distributional top and our shakeout with just minimal amounts of draining of the accounts. Now we're going to go to 1 BTC balances, which was much more achievable in the previous cycle. So we're going to start to see some subtle differences into how these addresses interact with one another, or how these addresses behave. I don't know if that makes sense. Anyways, you'll see what I mean in a second. And again, a little bit of a dip, and our trajectory is just kind of meeting a climax and just a nice gentle curve of the new wallet addresses. So we're certainly not going parabolic. That's another thing that's kind of different from what we saw in the previous cycle in terms of its mania phase, is look at the trajectory of the new wallet addresses as we onboarded more and more users. We're not seeing that this time. So Just subtle differences, but something to be considered. Now we take a look at the addresses of 10 Bitcoin. So now we're talking about real investments. We're talking about real traders who have money on the line, skin in the game. How are they behaving inside of the market? And again, we saw a parabolic onboarding of new wallets as we left the accumulation stages of the last cycle. We got a little bit of a pause as we were trying to break through not even the all-time highs. A little bit of a pause here in the new addresses, and then a continuation of that trend until we get to the peak where we had a drop off and then a steady incline, steady sideways movement. So we are losing just as much as we are gaining in terms of the wallet addresses that hold 10 or more Bitcoin. Furthermore, you can see as we get into this, there's a little bit of a difference. The amounts of addresses that hold 10 or more Bitcoin is beginning to decrease. So now we're talking about larger investments, and those larger investments are kind of tapering off. So this would be, I don't know if this is the dolphin or the shark. No, not even a dolphin or a shark. It's not even it's not in any whale category. But now we're going to take a look at what's going on with the balances that hold 100 BTC or more. So now we're kind of getting into rich territory. Again, all throughout 2016, 2017, we had an accumulation of these addresses accumulating more and more and more BTC. Into about the midway point, we had a little bit of a breather and a lot of selling off at the midway point. So the whales were selling about halfway through the previous cycle. Then we get to a little bit closer to the top, kind of just getting close to that real quick parabolic top. We saw the whales begin to offload as they anticipated the arrival of the blow off top. Once we got that blow off top, the rest of the whales began to offload and reduce the amount of Bitcoin that they held on their accounts, and then that kind of capitulated down into the bear market. So now we're going to go one more step up to the 1,000 BTC wallet addresses. Very different approach to this one, very different. You could see that just past the all-time high break, we saw an accumulation into the all-time high break. We saw flattening out and a decrease. So now this is kind of characteristic of what you would see, because cycle to cycle, you're going to have different balances. You know, when Bitcoin is below $10,000, you're going to have many, many more participants that would have 1,000 Bitcoin or more in their address than you would when Bitcoin is over $20,000 or, you know, $30,000, whatever the case may be. You're going to have this kind of wealth transfer over time. So a little bit of a different behavior, and you can see in terms of the Bitcoin addresses that hold 1,000 BTC or more, this would be considered the whales. Those addresses have dropped off as a result of this. So that's a considerable amount of supply entering the market. Now, when we look at the balances below that, it's relatively flat, relatively stable. So we're seeing this, you know, some on-chain analysts like Willy Woo have kind of said this, you know, a lot of the older whales from the previous cycle have been selling their shares to the newer investors. Now, typically that is, you know, the strong hands selling to the weak hands, but we're not talking about small investments here. We're not talking about willy-nilly investments of, you know, people that are getting involved in the space and wanting to hold 10 or 100 BTC. That's still a sizable investment. So those people aren't typically going to behave like the retail investor, where retail is going to go all in and all out, and, you know, they get chopped up in these markets. Whereas the more strategics, you know, institutional and savvy investors, you know, the hedge fund managers that we know are coming in, some of the institutional players are adding Bitcoin to the balance sheet, you know, like Tesla and you know, other companies as well, adding Bitcoin to the balance sheet. So there is definitely a change in the characteristics of the owners who are wanting to be buying Bitcoin. So For me, the on-chain data is not showing a significant similarity between what we saw in the later stages of the mania phase of 2017 to what we're seeing today. So does that mean that we're out of the woods? Does that mean that, you know, we have to continue to the upside? I think that there is a bit of a chance where this is just a brief pause and we get a reaccumulation that goes on for several months. But from a technical standpoint, again, I just want to drill this point home that you can't be looking for downside targets to achieve upside ones after the fact. We are in a technical downtrend. Please realize that there's no level to the downside where you go long and think that, you know, that's going to be it. I'm going to snag the bottom. It's very important in analysis for you to not try and catch the bottom. Don't try and sell the top. Make the money in the middle. Make the money based on confirmations. And that's what we try to teach in the crypto jungle. So if you are kind of wanting to take a more neutral approach to this market, if you are struggling to, you know, make heads or tails as to what projects are valuable and why, then join our community. Links down below. That's all the time I have for today. If you guys enjoyed this content, please leave it a like. Don't forget to subscribe. And if there are any projects that you would like me to take a look at, leave them in the comment section down below. And until next time, please trade safe. It is a jungle out there. Peace.